What's up, guys? Good morning. Good morning, good morning, good morning. Good afternoon in London and good evening in Asia. 9 p.m. and 1 p.m., right? 9 p.m. in Asia, 1 p.m. in London. 8 a.m. in New York. And it's a cold ass morning in New York. We'll get started in a minute. I'll give you guys a second to settle in. Grab a cup of coffee. All that good stuff. Make sure that the margin is correct. I know yesterday when I was streaming, there was a portion of the pane that was cut off. Yeah, we have some economic numbers today coming out. We have GDP at 8:30, and no, I'm not going to be trading it today. I mean, if I wanted to, I have all the ladders, but I think I'll just relax. No positions before market open. It's not normally the case. Most of I want to say. I was going to say most of the year, but I only started trading equity index futures again. I guess we're going on like a month and a half now. But yeah, normally 8:30 is when you start to see a pickup in activity. So, but we'll take today off because of the stream. Good morning, good morning, good morning. So if you're not subscribed, hit the subscribe button, hit the like button, all that stuff. Get the formalities out of the way. None of this is financial advice, even though me saying that doesn't matter. But yeah, we're going to try to keep this as entertaining as possible because it's for entertainment purposes only. There's not a whole lot that's going on. I mean, I'm going to try to keep these. I have rather kept these streams pretty short and to the point compared to other streams which might run like an hour and a half to 2 hours. I know other people who stream and they run pretty long as well. And I just don't think that, one, the numbers don't really support it. Like if you look at just analytics, which is, hey, if you're trading, you should know the importance of looking at your stats, right? When's the best time for me to be involved? Like the other day I was picking up, I use Amber data, and we just look at, when realized vol is the highest, and I was talking about, it's on Tuesdays and Wednesdays and Thursdays that I really like to trade. I started looking at YouTube analytics, and I realized that a lot of people turn up, but most people don't watch the full extent of the video. And I understand that it's probably not the case that they use some kind of trimmed mean or trimmed average. And YouTube isn't finding out isn't calculating the interquartile range and figuring out the exact, number to represent the watch time. And it's probably including outliers, and someone who tunes in for a minute and then tunes out is going to skew the entire mean. But either way, I don't think I've ever had even a hour and a half to 2 hour stream that had a number that was remotely close in terms of the watch time to the entire duration of the stream. So people have better things to do. This is one of the reasons why meetings shouldn't run long either. Get to the point. You understand that I have trouble getting to the point to begin with because I tend to speak in ellipses and lose my train of thought because I do kind of speak off the cuff, extemporaneously, riffing. I do have bullet points when they're necessary, but there's not a whole lot's going on the last 2 days. We'll take a look at the chart and you'll see that that's quite obvious. If you look at just ATR of 30-minute candles, if you even look at, like I shared this morning, chart of it was the 3-minute time frame, and it looks like market makers are quoting like the way it looks, right? It's not the case, but it looks like they're quoting with like a $20 spread. So at the end of the year, there's not a whole lot of incentive to trade, right? For one, I mean, putting on some window dressing, maybe making some adjustments. But especially this year, it doesn't make a whole lot of sense to really get aggressive into the year end. If you didn't do it already, you're probably not going to do it now. So shout out to Phemex links below. That new bonus structure is not in place yet. If you do sign up before then, just reach out to me. Let me know. I want you to, if you're going to try the exchange out, and if you're going to, do that before the bonus structure comes out, I don't see reason why you can't qualify for that bonus. I could just reach out to the team and make that happen. All right. Let me just say hi to some people. What's going on? I say I want to say hi to people, and then I read everyone's oddly spelled names. Not oddly spelled, but I don't want to embarrass myself trying to pronounce anybody's name incorrectly. Yeah, a bit different. A bit different from last year. That's for sure. Yeah, live your entire life in ellipses. I'm the same way, man. I'm the same way. And I was talking to my wife about this recently. I probably should take advantage of a lot of the tools that are available to us in with respect to like tasks and taking notes and scheduling. Like, I just try to go off of the top of my head with everything. Not with everything, but with too many things, put it that way. Keep things on the mental back burner, and then they completely get lost. All right, let's get into it. No real news. Today's numbers. We have some economic data coming out today. That's at 8:30, so that's like 18 minutes from now. We have GDP, unemployment claims. So there'll probably be some measure of volatility. It's gotten muted as the course of the year has progressed. And again, it is the end of the year, so I don't see a reason why we're going to see any kind of major changes before year end with respect to BTC or with respect to the S&P and equity index futures as a whole, or just benchmarks or indices as a whole. The only thing that I would lean on happening more, if I was just going to lean on one outcome, it would be maybe us having like a Christmas sell-off or into the year-end sell-off, because honestly, markets look heavy. Regardless of the outlook of thinking that we bottom and things improve in Q2 in 2023, I just think that the market looks like it's kind of a really thin branch right now. So expecting that we spike and test the lows again, if that's going to happen, this is probably the best time for it to happen, just because conditions are really thin and there's not a whole lot of friction in the way of that happening. And open interest as of the last couple of days has been grinding upward, and price hasn't gone anywhere. So someone is tagging on risk. So someone is going to be wrong, because there's no one that is right in the last few days with respect to direction, because we've just been moving sideways. So people are getting committed, and it's for nothing. So have that coming up. There's no real news. Maybe the only news is as of last night, there's been a little bit more clarity with respect to Caroline and Gary. I really couldn't care less at this point. I'm just happy that justice is being served. They've pled guilty. They had, I guess, a $250,000 bail. They're going to serve some time. So I've seen people talking about, they're going to get off, a slap on the wrist. They're probably going to serve some time, because I think what matters is if anyone comes in and helps them build a case is when they come in. So if they already start building a case against SBF and they already, have a decent amount of information, you're not as useful, right? So it's time is of the essence. That window of opportunity to come in and help out the government and receive that lighter judgment or slap on the wrist, that's a really small window of time. And you don't get brownie points for coming in like weeks into development. So I would expect that they serve time. And now the question is, what's up with Trabuco? Maybe he was the informant the entire time. All right, let's take a look at the charts. This is what we're looking at with BTC. It's pretty disgusting. I mean, it's actually not, because anytime this happens, I don't really, it's boring as hell, right? But at least you can't, you can, but it's rare. It's very unlikely that this persists for long, right? I say that and then I kind of backtrack, because if anyone has been around 2018, they remember that period of like $100 days. or maybe even less than that, honestly. I might even be thinking of that in today's terms, because these ranges right now are atrocious. I mean, if you look at, just look at, well, one, this transition of ATR, so 74, 45, 26 for the day so far. 74 is obviously, it's a little bit of an outlier with respect to the last couple weeks. And just to clarify for anyone who's maybe not following along, again, I don't want to take for granted the what people know with respect to what I'm talking about, and maybe if someone hasn't been following along, they haven't seen me talk about this for the last couple of streams. ATR of the 30-minute rotation, so 30-minute candles. So your average 30-minute candle range over X period, right? So usually the look back period will be like 10 or 14. So the average 30-minute candle for each day, 74, 45, 26. I mean, this is pretty gross. This is something that should help inform normally how you place stops. If you're placing a volatility stop, honestly, if you're scalping intraday, you should be happy with some kind of multiple of this. It's just at this point, like, depending on what kind of size you're trading, it's gotten to the point where the fees to get into position, it just doesn't, you can't really justify trading at least the same size. Like, you could continually size down, right? But for some people, like even myself, it's making it just, is it even worth it to trade? Like, why would I mean, it's the end of the year. I mean, it's the holidays are here. I have a child coming in a couple days, more than a couple, 6 days. So, I mean, could I get the motions in? Could I get the, we'll say the reps in? If you're an athlete, could I get them in? Yeah, absolutely. But is it worth it? I mean, absolutely not. So things are really tight. The benefit of this, though, is, I mean, as I was saying, in 2018, this persisted for a while. But the benefit of a really tight range and volatility really crushed like this is when you have a high conviction move outside of it, it's just becomes much less likely that will itself also mean revert. You've had small intraday movements that have broken out of what seems like, an intraday range, a tight window of prices that have mean reverted. But when we're talking about like something that is, let's say, 4 or 5x of what the ATR is outside of the range, so maybe you put on some kind of standard deviation band, maybe you put on some kind of ATR bands, it just becomes much less likely that after this amount of time has passed with this kind of muting of volatility, that mean reverts as well. So don't fade the first leg. In this case, we have 1 day, 2 days of inside value. So I want to say that, I hate to say like, it's around the corner, but it definitely feels like that, like some kind of larger move. And again, these larger moves they're not going to take us that far, but I think they would be worth trading if you're around for it, right? The problem is, like, with conditions like this, I don't just like sit in front of my computer anymore. I might set alerts, and because conditions are thin, you set an alert, price hits your alert, but by the time you arrive to it, it's no longer in a position where you're going to be looking to place a trade because the risk is no longer attractively defined. But either way, from a textbook standpoint, we have an inside day. So I mentioned this during yesterday's stream. I think that today would probably finish out as an inside day. I mean, we're looking at high, low. It's not hard to finish this day as an inside day. But the benefit of this inside day, now through hindsight, but yesterday we were talking about this developing as well, is that you have complete inside value. So it's very clear where buyers and sellers like to do business, or rather where they're getting committed. So we have an inside day being that such that rather this high and this low, even in the absence of value overlap, this high and this low would be a useful trigger or criteria for getting into position. So in this case, let's say that we didn't even have this perfect balance. If we're looking at, in this case, we're looking at potentially acceptance through yesterday's high or through yesterday's low, and ultimately the normal target would be, or I should just say the textbook target would be the prior day's high or the prior day's low. I went over yesterday during the stream. Normally I'd be looking at single print regions as an area that would potentially serve to reject price, and depending on certain context, maybe look to take profit a little bit earlier. I think it's very unlikely at this point, though, that is the case. I mean, we've had a couple different probes of the lows. I think it's very unlikely they would continue to tap this sort of air pocket and get the same response moving forward. Could be wrong. I mean, we've been rejected a couple points below, but if we break, say, for example, yesterday's low, I think that there's a pretty sure shot down to 1614. I don't want to extend too far from there because, again, conditions are choppy. If there is a trend right now, it's that the trend is that conditions are choppy. So I don't want to get to 16.4, if I'm short from 16.7 and then start holding off and thinking that, hey, maybe this is worth turning into a swing. I think that it's still just best to operate in these small windows. So that would be, I think, a trade worth sitting around for. The high, same thing. And in this case, I actually think there is kind of an exception. So again, normally inside day towards an extreme, right? But in this case, I think that this one is worth extending. So let me just I'm thinking this is Sierra. If this is the normal target for this particular setup, right? I think that in this case, considering the rejection up here and the semi-positive drift, so positive drift meaning just over time there's been a slow creep of prices in one, in this case, upward. And we've had that open interest increase along with this. I think that the test of these highs again actually does lead to some kind of overthrow. So if we start drifting higher and we're breaking yesterday's high and we're testing that 1750 region again, I think in this case we do get a much larger move upwards, and it might be an exhaustive move. It might not, it's not necessarily the case it's going to have legs or it's going to be sustainable, but I think it does lead to overthrow, and that's because this is happening right into a gap. And so far, the sort of the extreme of that gap has been somewhat tested. Not we never quite made it to the actual singles, but this region where you would expect there to be some kind of cutoff and some kind of supply, we did run into trouble there. And why does that happen? Well, just as a reminder, like if prices are ranging and you have this sort of long liquidation structure and you have those single prints left behind, the best way to think of it is one. So there's two sides of it. One, anyone who's long leading up to this, a lot of this is from stops being blown out. So just consider a room of traders. Half of them might not even be using stops. Like you talk to some traders, some of them don't use stops. A lot of times I don't use stops. So if you do go through an area where you blow out stops, you could probably assume that there are still people that are underwater that were not stopped out that normally would manually stop themselves out. And if price was to return to this level where stops blew out, that would be an area where those people would look to get out in a less painful, in better condition, right? Break even. So coming back to these gaps, right? That's one of the reasons why you run into pressure from the other side. Like at this point, coming back there, hey, if you're long and you weren't, you didn't have a stop, you're thinking, ooh, all right, I'm getting out somewhat better, right? I need more coffee this morning. My brain's not working. Also, right, for anyone who's short into the breakdown, if we start accepting into that, this is all unchallenged positioning, right? So a lot of the times, anyone who's shorted into this breakdown, they don't really have a clean invalidation. So when you start pressing through there, if you could work through that supply, well, it's pretty imbalanced in favor of this blowing upward because all those shorts don't really have a clean invalidation. And, it's not like all of them, like there might be a ton of them, right? This is a case where you might want to look at open interest and see if any risk was tagged on. But but there's no reason for them not to close out once price comes back to their entry. So that's why you usually get a pretty swift move through these locations. So if we end up breaking, just to bring this back, talking in ellipses, if we break yesterday's high and we test this high, I expect that we probably would actually come back up somewhere, if we zoom out a little bit, somewhere around these lows. So it picks up around 17,375. That's at naked point of control. So maybe you're looking at something that pops all the way up here, and you could continue to fail and fold from that. But the idea is, I think that this setup might have a little bit more length than the same setup, the equivalent setup to the downside. That could be stupid, right? Because there's not really much structure down here. Again, 2 periods of excess at the lows in profile and in the volume profile. So you don't want to test the resolve of those buyers again, but this was also from, a lot of that was from a short squeeze. Now, that's the inside day setup. Today we're doing it again. So this was the point I was getting to earlier. The more we move sideways like this and compress, the more likely any kind of further move outside of one of these tighter regions leads to the bigger move. So if this inside day setup normally wouldn't be triggered until, the higher low is broken, well, we have inside value for the prior day, and then today extremely balanced completely within yesterday's value. So this is not this is a little bit riskier, but this break from balance, so a high conviction move, since almost all of this day so far has been within yesterday's profile, yesterday's value. From a TPO standpoint, a break from balance, you might be able to extrapolate this as being the beginning or best risk-defined move for this break outside of yesterday's higher low. So there's a case to be made for getting involved a little bit earlier, expecting that there's a lot more follow-through. Now, operating at these extremes probably gives you a lot more certainty, right? But I don't know, might be something worth monitoring, because you don't always have the situation where an inside day setup actually has complete value overlap. So again, value being within value, and then this value being entirely within that value. So this is as balanced as you're going to get, put it that way. This is like the Russian doll structure of TPOs, one completely inside of the other. So I guess we would say this is like the most Gaussian distribution for the last 2 days that you can ask for. So that trigger criteria would mean that it might be worth starting to pay attention for the larger setup around 1685, 16860, right around that zone, and 16780. So today's range, and this concept, right? If you, one sec. It's kind of what we're seeing right here is like the same way that we would approach an initial balance if you're trading the S&P. A really tight profile, as the day is progressing with risk being added on. So again, looking at open interest adding up, it just means more and more people are committing in a tighter region. So, here it's happening right now. So when you finally do break out of that, just isolate this and assume that someone is absolutely wrong on the other side of this, right? So maybe it's happening right now. So we'll see. I'm so used to scaling Sierra that I can't. I'm like doing things for Sierra that I would normally do. What the fuck am I doing right now? Delta ladder. I keep grabbing the margin the wrong way, or the scale, excuse me. So outside of that level, right, you're looking for acceptance. So acceptance, to me, one of the signs of acceptance, one, arguably you don't want to see the same trap take place, right, where you have a break outside of that structure and you get a bunch of sellers selling into the low. But acceptance should happen right here. You should see that any buying that comes in is being swallowed. So this is not there's not much volume being done at all. But arguably you would want to see a good amount of volume coming in against the offer and for price to continue to auction lower. So any buying that comes in, right, the sign of strength is when buying leads to higher prices, right, and any kind of selling is still trading below us. So far this is looking like we're accepting below that low. I mean, there's really no participation in this whatsoever, so it's hard to tell. But this is where you would want to see it happen. It looks like we just traded right back within, actually. So we're back within yesterday's value. But any kind of commitment outside of this. So the idea would be price breaks below 16,780 and is unable to reclaim that level. Oh, I didn't even realize that the data came through. It's 833. It's 832. So yeah, I think this is going to roll over. But one of the reasons why I said I don't want to extend too far outside of here is because I think we could get chopped again, right? Where you have something. I drew this the other day and I shared it. Let me turn these Heikkens off. I'm experimenting with those. One of the things I think we could get again is something like this, where we break down, trap sellers, and then have this kind of slow grind over time that ends up taking us lower. So where this, and this has happened many times before, where, as I said, this kind of structure, breakdown over under, that's bullish, but you should see this resolve higher faster. We shouldn't just be building structure on top of a previous consolidation like this, right? You want to see that, buyers are bidding this up immediately. But as I mentioned in the last two streams, this is not the best setup when you have this occurring right into a high time frame resistance. If this happened, right, if we broke down under overed like that, and this was a gap, and it was an area where market didn't accept in previously, even recently, then you would expect this to be covered pretty quickly. But the case is that in this situation, we consolidated, but we came from an area that was previously very congested, and we're just retesting the underside of that right now. So this, I can completely see this happening. We break down, pop back up, retest, and then over time, we just have this melt that leads us back to the low. So that naked point of control, though, higher is 17.4. So making moves, that's what I was talking about up there. But we're back, right back within value again. With this kind of excess, right? So we had a rejection now outside of value. So let me open this up. So that's our excess on the day, that last move. So meaning this little tail. There's no reason why we should come back into that again. So that was the first move today outside of value. So what I'm saying is if we come down and test, there's no reason why we should test this low again. And if anything, I mean, the second time might be the charm. I still think high time frame we're bottoming, but all I'm thinking about is how much time do we get to spend within here retesting, the major areas within the structure. And my higher time frame bias is kind of informed right now based on this rejection. So, reject up here, we're just messing around at the most liquid area of the structure, which is mid-range, and we're going to make our way back down to the low. As I said, if we trade back above 17.5, I see no reason why this should do the same thing again. I would expect that high time frame move back up here, daily close to this level, acceptance on the high time frame, should lead to that larger move right within this gap. But we're well away from that right now. I mean, for the entire duration of this move, funding's been positive. Derivatives have been buying. Coinbase just, CVD just turned this morning. But if you look at CVD moving up, it was moving up with derivative CVD, the derivatives CVD as well. Excuse me, Jesus. I need like some honey in my mouth or something, because after 2 cups of coffee, I just can't talk. But if you look at CVD right now for Coinbase, it's just on the up and up. Prices, not at all. So if there's any buying finally from the spot market, it's not leading to anything. And if anything, it's being completely absorbed. And the entire time, funding has been positive for the duration of this structure. And if you look at, again, just kind of where, let's just pick the starting point of this move right here. So this little, handicap ramp of open interest. Let's say the starting point was right there. Price is kind of flat, right? We're like probably like 1% under there. Why the fuck can't I? Here we go. 34 basis points. Yeah, 30, right around there. It doesn't matter. But meanwhile, open interest from that point is up 4%. So what is that, a 12x? Think about open interest up like tenfold compared to that. And all of this while funding is positive. And for me, funding only matters when it's persistent over time. And when the price action really stands out as being divergent against whatever activity is coming in the derivative market. So signs of trouble would be any moves down leading to drops in this OI. So I think you're getting that, sign that longs are being wiped rather than shorts. If you start to, start to see that one side is being responsible or a move in one direction is responsible for the wipe in OI, I think you could kind of extend from there what side is going to be in most pain. If the move continues down, it's more likely that, or rather if the move is moving, I can't even talk right now. If price is moving down and open interest is dropping rapidly, and that open interest is still elevated, I think it's very unlikely that, the bulk of that is from shorts getting in position and not longs. So making moves thinks it's mostly shorts. All right, so Bitcoin is boring. So let's look at the ES. All right, so as I said, again, I hate to say the sentence as I said, but since we do these streams now every day, you guys shouldn't have to necessarily go back and watch. 35.50. What did I say? 35.50. I put this box here because I always just have a zone, but 35 or 50. I think I said 50. Yeah, the underside of this structure, a little bit deeper into it, would be the area where I would switch bias, but I was bearish until we reclaim that. So this was just a retest. Retest of it, completely lost momentum overnight. Market opens up in, just under an hour from now. The S&P closed at 78, so we still have a little bit to go to get back down to that level. Considering the weakness right now, as I said yesterday, if we have a gap below us and price is weak and we start closing that overnight gap, I just trade in the direction of that gap. But, under the assumption that it's not going to close completely. but that any of that overnight positioning, for the most part, gets wiped. So whether it's long inventory overnight, or if the gap is in the opposite direction and it's short inventory overnight session. I mean, let me just pull open Sierra real quick. Yesterday's move was pretty nice. It was we accepted, I talked about the poor high the day prior and then value between those two profiles. So that was between 38.57 and 38.97. So I know you can't see the margin, but I'll just yell out the prices, or I won't yell them out. But yesterday we re-accepted within value, held that level, held the highs of the previous day. So a lot of the time with this, you're just looking at the most sticky point, so the POC and the high of value. So we completely covered that. So yesterday was a really nice move for risk, at least for legacy. Actually broke outside of value, filled out this lower volume pocket, and now we're re-accepting back within that composite. So given that momentum has died at a high time frame resistance or a level that would be reasonable to retest but not necessarily reclaim, I know we have a poor high today, but I think that I've said it before, you have to think of poor highs as, yes, areas where the market was able to kind of like warm up to, right? It wasn't completely rejected, but it's also a sign that maybe things are just completely losing steam momentum wise. So normally, a poor high means that price is able to consolidate against a region. So if you were to compress price action that was pretty tight like this, you would be left with some kind of ledge at the top of that profile. Whereas if you had price action like this and then a spike, right, that profile would look, that would have more of this kind of shape. So this profile is flat tops, right? That's an anomaly. But that doesn't, we don't have to come up there and run stops. We don't have to come up there and spike and get rejected. Things can just roll over. So that's what they would look like, right? If price is kind of huddling against a region and just completely rolls over, you're left with this kind of flat top. Same thing can happen at a bottom, right? Where it's rounding out and then you get left with a poor bottom. Either way, we're re-accepting back within this composite. So the target is back down here right around 38.56. There's no sign of life right now so far from these single prints. So normally this is, if you're looking at getting involved in a trend and potentially getting involved in a continuation play, these single prints would be sort of the last bastion of support that you would look towards, right? You'd look for price to lick into this area. And again, same concept as the, long liquidation structure. If these are shorts getting blown out through a level, well, assume some of them haven't been stopped out. If the market comes back down to that level, then you would expect maybe some of them to close out at break even, and you just help that process of support get found. Whereas now, this didn't do shit. We filled that out. We didn't fill it out, but we repaired it so far. And you're ultimately looking at yesterday's POC and the low as an area for price to return to. Now, I don't know if I would, I wouldn't necessarily want to obviously jump in this right here, but best case scenario is you get involved closer towards that value area high around 38.97. So maybe, market opens up, repairs some of this, right? Because this is still pre-market, comes in and retests the underside, or rather, excuse me, the top of value, and then you get that better risk-defined play. This kind of looks like it just wants to puke, right? I wouldn't chase this like this right now. See that iceberg that was just blown through though. So this is a good little lesson. So you see that spike in the distribution? That's an iceberg. All right, so chances are that someone bid that Yeah. Oh, you can see it perfectly. So someone bid that so far. See how clean that line is, right? And that's a 1,000 volume, a 1,000 tick candle. So we'll put this on 350 trades. See how clean that level is. Well, you don't have to look at price action to see that. If you have a volume profile, you'll just see that this level will accumulate a massive amount of volume. And you can probably see that on, I mean, I don't know why I say probably. You could absolutely see that on the footprint. We'll see how much volume was done there, actually. So specifically, fucking pointer. I'll put on a higher time frame candle so you could see it kind of aggregated. There the iceberg is. So delta is negative 1900. You got 1500 contracts, 600 contracts, 1100 contracts, 900 contracts. Now I posted this in the Discord. If I see, and this is going to sound kind of counterintuitive, but I guess it's a good time for a little lesson. If I see an iceberg, so either you're looking at it on the footprint or you see it developing on the profile. And this is one of the reasons why I like a really granular profile in terms of tick size and in terms of, so I like a granular profile with tick size, but also I want a profile that has a larger width. So you could adjust the width of the profiles, right? If you don't want it to take up too much of the screen, you could set it to like 20% to 30%. I like to have it pretty wide because I want to see the sort of gross disparity between high volume and low volume areas. And this is just immediately standing out as an iceberg. You don't even need to look at a footprint. You don't need to look at price action. You could just see it. You'll see it develop over time, and you'll just watch it grow, right? And it leaves you with this really weird anomaly within the profile. Now, if you're seeing this happen, so if I see this, I don't want to give you advice, but when I see this happen, in this case, price is traveling down, and I see that there's someone that's just providing liquidity, I take the other side. It's very rare. So this person might be right? Building a much larger position. They might be right over time. Chances are a person that's filling an iceberg doesn't have a high time preference. So they're looking to get involved for a massive amount of size. They're either trying to defend the level or they're building a bigger position over time. In a thicker market, it's actually better to use a TWAP. Icebergs are better in thinner markets, but either way, right? Because there's plenty of different algorithms in legacy that don't just get simplified to either TWAPs or icebergs. But in crypto, like the most sophisticated is like a TWAP, a swarm, and there's not really much iceberging by most retail. But either way, right? The idea, like if you're looking at this and you're someone who is newer, you might think, wow, that is someone who's buying a lot. This means that price is going to go up. Maybe over time, but almost all the time, right? Very few exceptions does this not immediately get hunted, right? So if I see an iceberg develop, and in this case, you have an iceberg developing over this region and you have a series of lower highs being formed, I'm going to take the risky play of shorting this. So if we have a massive bid, so if we see that, there is, so for example, one sec. So here is the current price. If we see that there is just someone sitting on the bid, right, absorbing all of the activity, and you would see that in the more recent sales right here, so I'll just clean these up. You'll just see that volume develop, and I got a little footprint there for that reason too. You'll just see it that area will just suck up all the volume. If I see that happen, and it's in the bid in this case, I am going to just short into that. And this is not with like a great expectation of a much larger move to come. This is a lot of the times just for points, because almost all the time, like I said, this will get pushed through. And a lot of times, honestly, you'll see that, and it could just be large retail traders even picking up 1,000 contracts. Actually, that's ridiculous because 1,000 contracts, no, 1,000 contracts in the S&P is like, it's like $230 million. Actually, is that right? So I'm just doing a rough math right now. So, well, we'll just hold on one sec. Yeah, that's massive. Either way, sometimes you'll see that that position will actually puke and help this move. So if it's at the bottom, right, and there's an iceberg in the bid, or if there's an iceberg in the offer, I'm usually trying to take the other side of that. Usually, I mean, almost all the time. So it's a matter of if I could spot it while it's happening, right? So I've shared this in the Discord. There's let me pull the Discord up real quick. It's in here you go. So this is an entire write-up on that. Here, I'll share the link too. So the inverse of that would be if there's an iceberg that's in the offer or in the ask, and I would be buying into that, expecting that it's going to get blown through. Where's the invitation? Hold on one second. Here we go. All right, it's almost 9 o'clock. I mean, there's not a whole lot. There was not a whole lot to cover in the stream. I probably talked like 30 minutes longer than necessary. Yeah, I wouldn't be chasing this right now. I think this is something that it absolutely could just puke. But I wouldn't want to chase this because we're right around the midpoint of value. If anything, you could be trapping a good amount of pre-market shorts right now that get punished after the open. So something I shared yesterday, and I shared this in the Discord, I also shared it on Twitter, was I was paying attention to this HNT, Helium. Massive increase in open interest. Funding was, I don't even know what it was annualized, but it was 3% at one point. 3% longs were getting paid. So, I mean, I don't know what's up with this, but it could be, it's probably just a fucking exit scam pump. But 400-fold increase or 400% increase, so fourfold increase in open interest for what was, not modest, but in total 40% increase in price. So you never want to be the first person to try to fade this because what's the reason for it to stop? It's been acting crazy to begin with. But what you want to look for are signs what I like to look for, which was what I said yesterday in the Discord right before this happened. Not right before, but a couple hours before. I'm not looking to short this until we have some kind of major exhaustive spike and engulfing candle. Now, metal is a good example. So this is what HNT is going to do. And this was just in the days leading. This was right before HNT. But ideally what you have is you're going to have something that's vertical, right? Open interest is going to be mooning with this. It's going to show the first signs of rolling over, and it's not going to roll over, right? All you're doing is bringing in the first batch of shorts that are going to fade this. The first significant batch. When you show signs of weakness, you're going to bring in more people than if you just continue to rip upward. So you consolidate, it looks like it's breaking down, and that's when you get the real significant spike that might be worth fading. So you at least want to have, in my opinion, right? You want to have something that looks like it's going to roll over and then gives you a final spike. And this is as good as it gets for at least the first entry in some kind of fade. You have this 15-minute candle that is an engulfing candle of the last 45 minutes prior. It's the first significant kickback by the market. Now, it's usually not going to be the bullet that ends this, right? It's going to continue to fight upward. I think, though, one of the signs of the shift is when you have funding, you have people that are fading this the entire way up. So you have derivatives buying, but you have people that are passively selling this enough that funding is staying very negative. So you want to see that this behavior somewhat changes, right? Where you have a drop in open interest, you start to have long liquidations come in, and you start to see that funding come off. Now, by the time that both CVDs start moving together, so spot and futures market, this thing probably going to start moving rapidly in the opposite direction because you have two flows in the same direction. But this is going to absolutely come back down to revisit this 170 region. Now, the kind of ride that it puts in on the way down remains to be seen, but almost with complete and utter certainty that this will completely retrace. And I'm only going over this because I mentioned literally a day before. So we'll see if I could find that. And then we'll wrap up the stream. Two things that I've used to bag really good shorts in alts recently. Filter for percent change in price and percent change in open interest. Never sell the first pump. Almost all major pumps look dead, consolidate, and then put in one more squeeze to punish the first wave of sellers. Now, this was before this even happened. So if you're using Coinalyze or any other aggregator, that's what I would do. I would look for the cases of not only big spikes up, but ones that get really crowded and have a lot of risk tagged on. Because most of that's going to start switching to the long side if you don't have the first faders initially, because people just chase pumps, right? No matter how PvP this market gets, where it's down to the final traders of the market and retail's dead, you still have people that are going to be chasing green candles. And creating these kind of top-heavy structures. But yeah, I think I'm going to wrap it up. So, real quick though, let me just turn off these indicators. At a minimum, I think that we're looking at least this 38 region retested. I mean, high time frame wise, this can bottom over the course of months, right? But we have a pretty damn big range to trade within. And this gave more of a throwback than I expected. I've been sort of using these as examples, these tops as examples when this market structure broke. I said I think we're going to get a throwback, and then this is ultimately going to be a sell. But now that market structure is broken, retested, and failed, I think that you're looking at least the major swing points within the structure. Where does the market need to go to get more people involved at this point? This low is an obvious target, and I think these uninterrupted lows on the way out. I'm not gonna commit the sin of just extrapolating this all the way down to the low lows, because I think we have some levels between that are going to offer a good amount of two-way trade. Not to say something like this, something like this can happen. Why do my drawings always suck? My drawing of price action, when I go to circle something, I always fucking completely miss. I think that I need to slow my mouse down. Because that, or I just don't have fine motor function. I mean, I do. My hands don't shake. It's not like, things that you might ways you might qualify, poor motor function. I could thread a needle, but for some reason, when I'm just on a whim trying to identify something, if I'm trying to point out this high, I'll do this, right? I apologize. I have to be a little bit more precise with, you know what I'll do from now on? I'll just do that. Yeah. Why didn't I think of that? I want to isolate this area. This is where we're focused. Yes, we're going to come down here. All right, guys, I'm going to wrap it up. This market's driving me crazy. Oh, last thing. So I mentioned this morning, I'm going to be experimenting with Heiken Ashi. Heiken Ashi I don't know the exact formula, but it basically takes an average of the last candle's price and then the average of the last candle's high and low. And it smooths out the data a little bit. So I'm going to start experimenting with this on the low time frames because I've used it on the high time frame before with moving averages. But for intraday momentum plays, for me, I have a tendency. So this again, I just started trading the ES again recently. I just started trading the NQ again recently. I have a tendency to get thrown out of moves that I have a good amount of conviction behind. Before I take the trade, I have a good amount of conviction behind the setup, like point A to point B being covered, but I have a tendency to sell earlier. So what I think is I'm being shaken out because of intraday noise, right? You trade BTC, you're used to noise, but going back to trading the NQ, for example, way more than the ES, there is, like I said yesterday, the NQ is like the ES smoked a crack pipe, right? So I'm going to start playing around with that. That or integrating some, I mean, you guys have seen this chart. I had the moving average on it, integrating some kind of faster moving average just to very quickly be able to identify, a market that looks like maybe it's, not to identify, but rather not to get shaken out of, to not get shaken out of lower time frame intraday moves, right? Now, if you look all over this, there's, you could easily, with hindsight, say like, oh, I would have stayed in it and got out of there and got in here. That's not the point. I'm still using the same tools to get involved in the trades, whether it's order flow or TPO. But when the move's in progress, right, I just want that little bit of extra detail and that visual cue. That's what I'll say, visual cue, to be able to quickly see things and say, okay, so this is, I'm not going to get out of this unless there's any kind of major change in order flow. So that's that. Hope you guys have a fantastic evening. It is Thursday, so tomorrow will be the last one